Hi, and welcome to this simple analysis of Sparebank and SMN. So, what is Sparebank? More or less, it is a small bank, more local, actually county level when it comes to this one. Its main focus is to maintain relations with its customers and keep retention up. They also have a lot of local advertisement, and the bank is actually 200 years this year, so it's been there for a while. They also have a lot of financial products, for example, loans, accounting. They're also doing investing, savings, and insurance as some of the most typical products that they are delivering. And also, I would like to mention that they are a member of the Alliance Sparebank 1, so that means that they get some benefits from that, and also they are one of the main owners of Sparebank Group, the mother group of it all. Like they own a certain amount of that. So this provides them with their own investment platform that is split in between a lot of the local banks, so the fee is lower. They also have like this kind of cooperation thing going on, right? And we stay in our county, you stay in yours, to not fight too much directly together with each other. And they're also benefiting a lot from something called LO-favør. So LO is a trading union, and this banking group is actually getting a lot of the benefits from LO since they have a deal with it. So it helps with the customer retention and provides a lot of benefits. So how was 2022 for SMN? Well, it was a high evaluation fall. As you can see, they almost fell with around 40%. And they also managed to keep a high activity. So honestly, they probably really didn't deserve this big of a fall, but it is kind of a little bit of a market crash we have gone through, so it is natural, as well as saving banks these kind of banks should more or less always provide a dividend over 5%, or else they're a little bit too expensive. They went through a little bit of embezzlement. It was a substitute who came in, and he was embezzling a little bit. It came out in 2023 in January, and yeah, he was embezzling around 75 million NOK, so quite a lot. They had low to none loan losses in 2022. They did a really good job there. Or you can say that it looks like they have had a very safe portfolio. They also have been in a good place in the middle of Norway, so the electricity have been lower than in the east of Norway or the south of Norway, so that gave them a little bit of an edge. They have, though, had a small decrease in EPS, and this have shown some negativity that we will go in a little bit later. So when it comes to the statement, you can see that they have a low revenue growth. It has actually increased with only 29%. That is quite low yearly, around 3%. And it makes sure that you know that it's not a growth company, that is for sure. Their margins, though, they are good. The margins are varying from 22 to 36%, which is quite at the higher end of things. So I'm quite happy with the margin. I hope that they will be able to keep it high. You can see it's a little bit of a downward trend since 21, but it's going a little bit up and down. At least it seems to be stable over well over 20. In general, yeah, I like the margins of this company. Their result growth, though, it is also quite okay. It's at 56% over the time from 2014 to 22. So that is more or less around 6% yearly. I would call this as an acceptable growth, at least based on what they're doing. They're more in the retention space. So yeah, quite okay. And when it comes to the dividend increases, it has increased with close to 300%. I would say that is a good growth in general, very good actually. But in 2023, it's actually going down. So it's just something you as an investor need to consider. You don't really know that it will continue increasing like a lot of dividend investors are talking about. When it goes bad or when it earns less, this stock is not afraid of pushing down the dividend. Just be wary about that. So don't go in when it's too expensive, basically. And when it comes to the balance, you can see that they actually do have some decreased liquidity. In 2014, they were sitting there with quite a lot of cash, and now it's more or less a fourth of that. This puts a little bit more pressure on the liquidity that they hold. And yeah, it's just something that you as an investor should know a little bit about. It's always safer to have more cash at hand, even if it might look a little bit worse in the long run. They have increased their loans. This is a bank, and we will go a little bit deeper into it. So in itself, I would say this is typically a bad thing, but due to this being a bank and a lot of this is related to deposits, yeah, perhaps it's not that bad at all. They have managed to improve their assets, which is loans out and these kind of things. We will go deeper into that in the next slide as well. But in general, it actually looks they have had a big growth in assets. They've had a big growth in total liabilities. I would say that it looks like they have had a slightly negative trend, but if you look at this bank balance, you can see that deposits have more or less doubled when, well, the loans is at 15,000, right? If you compare it here, 15,000, and then the deposits is 122,000 of that. So it takes a lot of the loans in there. Their credit debt and securities have increased. It is higher now than what it has been. But at the same time, due to the amount of deposits, due to the amount of general health in this company, it doesn't look that bad. But I do hope that it will go down. The securities will cost more going forward, and the same will the credit debt. I hope that they will focus on it. You can also see that the gross loans have gone up quite considerably. So hopefully, if they are able to keep their margin going forward when it comes to the interest rates, that will be quite beneficial, or even improve them. And I would also really need to mention the loan losses. Look at that, it looks really low. And look at 2022. The middle of Norway did really well. I don't think that they will have that great next year, or like in 2023 now, but still, it's a good job. I find the balance interesting, and honestly, from the amount of increases, I would have expected a better statement, but at least the balance looks quite. And when it comes to the cash flow, you can see that it has a negative cash flow. This is of course related to more or less giving debt. So when they're giving debt to customers, that looks negative on the cash flow. So where we need to look really long term when it comes to the bank's cash flow. Of course, you should pay attention to how it works, because too much debt will make things more difficult. So yeah, just pay attention to it, but it's a little bit more difficult to read if you're not going deeper into it than just the basic forms as you can see here. I would also mention that they have managed to increase their dividend again. You can see from 227 million NOK to 547. They are in a slight downward trend though. Yeah, just be a little bit worried about that. And you can see that the investments are going a little bit up and down. Of course, this will be a little bit more dependent on how the market is working, and they're buying, selling shares, like not only shares of course, but yeah, it's a bank. They're investing in a lot of different things, available assets, and you can see that here. You can see the finance as well is quite varied. So during times that they're loaning out a lot, they will take out loans in securities, which we were seeing in the bank balance. So you can compare it and you can see that this should work quite well together. The pluses is from the security increases, and when they have done better, they have taken less in loans, and basically they have spent debt to grow, which is quite typical for a bank because they need to get the money from somewhere. And they do pay a lower interest than what we do. In general, I feel like doing this bank stock was a little bit more difficult because it's a lot of nuances in the cash flow, in the balance, that is not as difficult to see in other companies. It's not as straightforward. Of course, if you take the time to look deeper into what actually goes in and out, you will understand it a little bit better, but that would make this video quite a lot longer, so I will not go that deep into it. But if you're interested in banks, I would recommend to take a look, compare it, for example, to SpareBank. And when it comes to the key ratios, you can see that they keep the margin quite good. They have a dividend around 5 to 5.5%, and their price to earnings is quite good, and the PE is quite good. I would also say that the return on equity is quite acceptable, together with the average return on equity. It's in the lower end if you compare it to some of the other stocks that I have taken out here. And I'm actually looking forward to going deeper into other Sparebanker going forward to compare it with this one. But unfortunately, right now I don't have the data to give good comparisons. I would also like to show here the bankruptcy rates in the middle of Norway. You can see that in Q19 it was actually quite a lot worse than what it was during COVID, which is quite unexpected, right? And also what it has been during the current market. So obviously it's in a safe space, and it's doing quite well. And I would also like to mention, this is the loan portfolio. So here you can take a look, see what you find more or less risky. So typical risk should be more towards real estate or offshore maritime sector, hotels, at least if you base it on COVID. Yeah, like their main points is mortgages, as you can see. And I would say that generally they have fairly low risk exposure. Loan portfolio seems to be good. I've added some weekly news because, well, the news have been quite rough lately. When it comes to bank runs, well, they can happen. It's all based on trust and financial insecurity. It's also based on like the banks, and that trust is quickly going away together with the insecurity in the markets, right? So, of course, bank runs can happen, and it's never a good thing, and it's based on, well, I guess a fault in how banks function. So it will always impact the liquidity of a bank, and it can create issues no matter what. It depends on how big the bank run is. A lot of the banks are quite connected and infiltrated. If a bank in, well, let's say Switzerland goes bad, it can impact a lot of other banks. So, for example, companies might have a lot of debt to Switzerland and to this bank, and it might impact other places. So they're very intermingled, and actually when you read in warnings in the Norwegian Central Bank at least, they're warning about this, that if one bank goes down, they're too connected, and it's actually very bad. So it's something that you need to consider. To be fair, the Switzerland bank now, Credit Suisse, did actually get money from the central bank in Switzerland, so it seems like, again, banks are being saved. But it's just something to have in your thoughts, that if the system goes bad, if the system is rotten in other countries, it might impact the bank in your country as well. The LCR ratio, so this is basically the liquidity the bank is having for, like, 1 means that they can have it for 30 days. This is the least expected, and this bank, SMN, is actually having it for 239%. So liquidity coverage ratio. So SMN have it for 239%, so they're having quite a big ratio, and I compare it to DNB, for example, which have it at 149%. So they have a lot higher LCR ratio than DNB. There is risks and obligations in the market. So right now you can see that they have a lot of bonds and money market certificates. And since what you saw with that Silicon Valley Bank, they showed the highest evaluation, what they bought it for, what it's actually worth when the loan is paid down. And it's difficult to verify what is true and out there. So this is based from what SMN is saying on market information, so observed market information basically at level 2. So that indicates that the bonds should have that exact value at that time. And from what I understood, they had a lot of interest that is following. Yeah, you can see here, for example, the fixed interest rates, right? It's a little bit risky here, right? It's obligations fell in the start of this war with a lot, and you already seen the Silicon Valley Bank struggle with this a lot. Of course, Silicon Valley was, that bank was not really regulated, and they had been working to make sure that is happening. This is kind of like this extra liquidity that the banks are picking up. And well, I know, for example, DNB have been out and said that there is fixed prices. And I also checked with the Central Bank of Norway, and they're mentioning that they are selling fixed priced national bonds. But it is a little caveat. Not every Norwegian bank can buy it. And I'm not sure how it works outside of Norway either. Since SMN is a Norwegian bank, I will expect that they have a little bit better security than, well, for example, Silicon Valley Bank, which is not regulated. So the question is, are banks in itself safe? I would say as long as you don't have too big bank runs, they should be safe. We don't know what will happen with the current debt roofs. Are we there yet? Will it crash yet? Well, America increased their debt roof again, so it looks like they're at least safe for now. Is it something that might hit us and might remove a lot of safety in the banks? Probably. I don't want to go into how deep, because that would require a lot more research than what I've done. But for now, I would say they do actually look quite safe. They are having some benefits from the increased interest rate, as long as the financial health in the countries are doing okay, company-wise. It shouldn't be too big bank runs. So the current areas that have experienced these bank runs are in crypto or high typical growth areas with less liquidity available. It seems like the weaker points are being attacked. Real estate is unfortunately one of them, so that can create an issue. But yeah, for now it's not there at least. And then it comes to, is SMN safe, like this stock that this presentation is all about? I would say yes. But, okay, so they have said that their liquidity is satisfying. You can interpret it how you want. And they're also saying that they are having good enough liquidity for the real estate values to fall with 30%. That is kind of like their main thought. And they're looking very safe when it comes to the LCR and, yeah, those kind of things. So, for me, they look safe. Can they struggle? Yes, it can be difficult. Is there a risk? Yes. If banks all over Europe goes down, of course it will impact. But for now, Norwegian economy looks, well, quite okay. And I would say that it's not the biggest risk yet, at least. I would like to say that being a smaller player is actually one of the downsides. You have less investment money available, you will absolutely not have the same growth, at least when you're going the same mode as SMN is doing here, you are also more likely to get the wrong employees. Like, it's more difficult to get the best employees to a company that is not focusing on being the best, right? Or the biggest, the best. And actually it is an example on that, where now in 2023, where 75 million NOK was embezzled. From what I understand, 9 million is given back, but 50 million is basically gone. It has been a lot in the media, and I find this more likely to happen in the smaller banks. They have less choices and those kind of things. It is also like the political will. During COVID, Norwegian political system was very, very close to cutting all type of dividends and basically say you're not allowed to do this, you're not allowed to do that. And banks are more or less like the first go-to for them to stop things. It is a little bit of political risk in these kind of things. Also the fact that they're considering to increase the capital expectations, the capital structure, and it now needs to be 21%. Not right now, but like it's in the consideration from what I understood. So it means that the debt will be experienced as a lot more expensive in these kind of stocks. They're also very reputation based. Basically, they are in one place. The customers know of it. If they don't like you, they will just use a national-wide bank or a different kind of local bank if it is there. Like, they're not the cheapest either, actually. So they might experience some difficulties to contain customers if they're not giving back to the local community, and if they're also experiencing some struggles with their reputation. The issue that is going forward is that the higher interest will increase higher cost for their customer base. So customers will struggle more. Possibly we're looking into a period where the loan losses will go up. I'm actually a little bit worried that they will need to help the customers a little bit more, and that they will have higher loan losses. Another thing that I know a lot of people are very, very focused on dividend. I'm one of them. And they have decreased the dividend for 2023. Like, personally, I think it's good that they are decreasing it, but it is also a downside that they show that they're not able to keep up the earnings. They're not even able to keep up the same amount. So obviously in a situation where the inflation is 10%, it's even worse than what it looks like. Yeah, and just based on that, I would like to add that on the bad side. Though, like I said, it's like, for me, it's not necessarily a bad side. So, when we come to the benefits, I must warn you, it might go a little bit up with the downsides. It is a local bank. Honestly, I love it. It gives a little bit of diversification for you as a shareholder, especially since the different segments in Norway are based on different electrical grids, for example. Another thing is, it's quite stable, and, well, it's 200 years old. So it shows that it has good retention and it has a good reputation, and it's been able to keep that. The electricity prices have been better in this area than in the west and, well, in the south and the east, I guess. It provides a little bit more of an edge for the community around them, and perhaps puts them in less of a negative position going forward in 2023 and 24. And just to mention it, that the electricity prices might look different going forward due to the Fosen crisis that is going on. That is covering all of Trondheim City's power supply, and that might be teared down in the end. So it is a little bit of risk in the electricity prices as well. And also, they do normally give high dividends, like 5% plus is something I would call decent. You could argue that due to the current interest rates, having a bond might be the same, but like these kind of companies, they do normally follow inflation in a better way, and 5% dividend is historically quite a good dividend. It deserves a little bit of respect. They also have a community dividend that is to keep the customer base loyal, and it provides this kind of local reputation boost. They also are really good in giving money to the local community, like sport clubs, and just generally creating events for the community. It makes it more difficult for DNB to steal customers from them, just because, well, at least we see these guys in our neighborhood, right? And when it comes to diversified, it's actually like they have the accounting, they have the housing sales, they have the business loans, the personal loans. They also have like the insurance thing going on, right? So they have a lot of places where they're focusing on spreading out. And if housing sales is doing bad, as it is kind of looking to be doing now in 2023, it still have other places to focus on. And due to the general health, the general assets, business loans should be standing strong. Also the potential in the area of Norway due to the electrical grid right now, it's okay, so like it's good. So I would say that they have a good diversification going on. And then when we go into the personal market, you know that salary people, they tend to be able to pay their debts. It's often well, going bankrupt is, you normally have safety for it, and also like the less risky loans, it's a lower amount, 8% of transportation, 5% offshore. It's looking quite safe. So where is the Sparebank SMN going forward? Well, I do believe that the lowering of the housing prices will put a little bit of pressure on the amount of debt that the bank can get out. It also will create a little bit of issues when it comes to their housing sales. So this will end up with getting less in commission. Also, with the higher pressure on loans, they will experience that taking the money for the bank statement, those kind of things will need to be, well, it's more often going to be said, no, you will get it for free. These kind of earnings are already going down. If you look in the Q4, Q3 reports in 2022, actually, these earnings are quite a lot lower than in last year. It's just something that you need to notice. As interests go up, commissions go down. Higher loan losses, even if the area in Norway seems to be doing quite okay, well, we are getting a little bit of risk setting there with the Equinor electrical grid that is going to be put in use. So come on, it's like 0.0% loan losses. Yeah, I think it will be difficult to beat that one. And we're going towards a more difficult market situation than it has been in a while. I think that the loan losses will go up. I would personally like to put the fair value of this stock on 120 Norwegian kroners. A few reasons for that. The decreased dividend shows that it is a little bit of a risk in the earnings. Their general slow revenue increase, 3% a year, that does not really provide a lot of safety when it comes to where it will be in the next 10 years. It is a difficult market going forward. We don't know like what kind of fight it will be in between the banks going forward, and I honestly do believe that they will struggle a little bit more. But for some of the good things is I still think that their dividend is good. But if you're buying a saving bank, never buy a saving bank that is below 5%, and never buy a saving bank that is above 7%. It indicates something bad is going on, unless it's some kind of special thing that you are really lucky. This stock in itself actually do look safe. And I would also like to mention that DNB's price is actually at 155 Norwegian kroners. So they are expecting quite a lot higher price than what I personally see as a fair value for them. Other than that, I would like to say thank you for listening to this video. Leave a like and subscribe. And remember, this is not financial advice for you to actually buy or sell Sparebanken SMN, but I do hope that you learn a little bit about it. Other than that, cheers!